Hello folks, thank you for tuning in to the Financial Dude channel. My name is Mark Allen. I'm a certified financial planner and an enrolled agent. Means I can practice before the IRS. I have a financial planning and tax firm located in Folsom, California. Today I'm going to talk to you about tax projections. First, what they are, and second, why you would need a tax projection, especially this year in 2018 with the new tax law. Hey guys, so we're going to talk to you about tax projections today, as my intro indicated. I started that intro a while ago, and now I've come back to get the content in there. So we're talking about tax projections. Well, first of all, what is a tax projection? That's pretty important to know, and before we even get into why do you need one. So a tax projection is something where we enter all your details in for the current year. And it kind of projects out what your tax obligations are going to be for the tax year. For your wages, for example, we can cast those out and kind of get close to what you're going to be by the end of the year. We know what your mortgage interest was in the prior year. We can come close to that in our projection. Basically, we're estimating where you're going to be. Now, why would you want one of these? Well, there's a lot of tax planning to be had if you have a tax projection done, where many times we've been able to save thousands of dollars for our clients by doing this tax projection before the year ends. Last year's a prime example. We're in September of 2018 right now, and at the end of 2017 we had the new tax law coming into play, and we knew that it was going to land by December. And once we had clarity on that, we were able to tell our clients, for example, and you may have heard of this, prepay your real estate tax on your property if you live in California, because they're going to limit that in 2018, and we want to get as much of that deduction as we can into 2017 before that provision for us expires. Some people that didn't even make sense though, because they might have been an alternative minimum tax, in which case prepaying wouldn't have helped them. So a tax projection would add clarity to that. So why do you want one for 2018? Supposedly the tax law is simplified a little bit with the new tax. Well, one of the things that's most critical, and I think affects a majority of our tax clients, as well as probably you out there in the ether world, is the withholding tables. When they cut the taxes with this new tax law, one of the ways to boost the economy, which is what they wanted this law to do, was to reduce the withholding on your paychecks. What this does is instantly gives you money in your wages to go spend at the store, so it gooses the economy. So that's what they wanted to do with, to get that going, and because of that, you're not withholding as much tax as you were in the prior year probably. Which means you're going to be looking at a surprise tax bill coming the end of the year. So one thing you should do immediately is check your pay stub today and compare it to the same as last year. And specifically, you're looking at the federal tax withheld. And if those numbers are significantly different, you may have a tax problem coming ahead. So you need to dial that in. Are you self-employed? That's another new tax planning opportunity. We have this new 1099A 20% deduction for flow-throughs, but that also helps with self-employed folks, or if you have an S corporation, or you're in a partnership. So there's planning on that. Should you convert over to be a C corporation? Should you be an S corporation? Do you even need an S corporation? Should you be self-employed? So there's a lot of things that go into that decision. We're still getting clarity on a lot of it. But it's important to have a tax projection to make sure that we're optimizing that 20%. Sometimes you may be on the cusp of not even getting the 20%. We may need to reduce your income somehow, contributing to a retirement account, for example. So there's a lot of little tools that we have to use in order to maximize your returns on the tax law. Okay, just looking at my notes here. And then, of course, the tried and true planning opportunities. We have folks that maybe lost their job this year or slowed their employment down drastically. Income is low. Perfect opportunity to do, for example, a Roth IRA conversion. Take money out of a traditional IRA, generate taxable income, and drop it into a Roth IRA where it won't be taxed again. One reason people would do that, I saw this twice this year. People have excessive itemized deductions, and which wipes out their taxable income to zero. So they lose some of those itemized deductions. They go away forever. And one way to make sure they're not lost is to generate some phony income per se that will soak up those itemized deductions. And one way to do that is a Roth conversion. Take money out of the IRA, goose the income. You get to use the write-offs that you would lose otherwise to write off that, and now you got that money over into a Roth IRA. Anyway, lots of fun stuff. I think you're going to need a tax projection. These are the reasons we do them. Let me know if you got any questions. Thank you.